Yes, legends, we are live. Let me know if you can hear me, if you can see me in the comment section. And today on this live stream, we're going to talk about a little bit of higher time frame scenarios that could happen, but most importantly, what are the most crucial levels that the price needs to break to continue this bullish momentum, and also the levels that should be maintaining as support. Now, I'm going to go through the comment section right now in the next coming seconds. We're going to be talking about some crucial levels of support and resistance, of course. And overall, we are going to take a look at some very interesting charts and news that is going on, okay? So make sure to absolutely destroy that like button on your way in, guys. We'll be going through the scenarios, taking a look at Elliott Wave theory, where we are currently on the chart, realizing what are the next waves and, levels that we just need to be paying attention. Without a doubt, this zone is resistance. There is a possibility in going to higher levels. There is even a much stronger resistance zone at $67,000. And there is a lot of confluence at that area purely based off Fibonacci, okay, that I want to explain also in this live stream. So let's go right away through the comment section. Say hello to the beautiful community. Hi Andy, what's up? Market looks want to go up, but still we have the CME gap. This is also something that I want to talk about eventually. This CME gap that we do have in between 60,800 and 58,800 approximately, right? We've got a $2,000 gap that we've left from last weekend that is very disturbing, okay? Most of the times we do feel that CME gap, but we could go to much higher levels and then potentially fill it in the next coming days, right? And hit $67,000 or even $68,000. So without a doubt, we could see a corrective move happening. And we just need to know exactly where that could happen, which is the strongest levels of resistance where the price could get a reaction, form a swing failure pattern, double top scenario. We have major resistance here, such as a naked point of control at that zone where we're just hitting. We also have some much higher time frame levels of resistance, which is sitting below around about the $67,000 range, okay? That could definitely be hit with one more squeeze to the upside. And the reason why we could hit those levels and get a pretty decent pullback is based on Fibonacci extension moves, how this pump can extend another couple of $1,000s. Okay, but without a doubt, we are hitting resistance at the moment, which is a naked point of control that we did have on the 20th of June. Of course, if we do get the weekly chart, it is actually a weekly naked point of control. When we go to the weekly time frame and we take a look at that candlestick that we had here the 3rd week of June, and we get the fixed volume profile, it's a big, large red candle. And there is even a weekly naked point of control here above, okay, that daily naked point of control. So we do have a weekly naked point of control right over here, which we are getting resistance, okay? We are getting resistance from that level, and we have the daily naked point of control slightly below it. When we go to the daily chart and we do get the fixed volume profile, we've got a really large candlestick right over here. We do have a naked point of control, as you can see, a high volume node slightly beneath the weekly naked point of control, okay? All of this is providing some local resistance. Right now, we're forming a really nice bullish hammer candlestick, right? This is on the daily time frame. However, we would need to close here, all right, with a nice pin. As you can see, this would be quite bullish for a possible retracement tomorrow and then continuation to the upside, as bullish hammer, okay, candlesticks are extremely bullish for the next coming days. Something that we need to take into consideration as well. So we are going to focus on the higher time frames, okay? Let me just get these levels out of the way. We'll go through them in the next coming minutes. So, and later on, we are going to go through some some levels of support and resistance, okay, that we need to take into consideration. Let me go quickly through the comment section, say hello to the beautiful community, okay? That's something that I really want to do before I kick off here, the pure technical analysis. We're going to take a look at major levels of resistance and support. We're going to take a look at harmonic patterns. We're going to take a look at Elliott Wave theory. We're kind of going to cover all of these technical tools to see where is the highest, probability scenarios, such as long positions and short positions. And I know it might sound boring. However, we need to do the analysis here together on this live stream to come up with that perfect recipe, to come up with that really nice confluent zone to take a trading setup, right? We need to plan our trades, manage our risk, and look for that great scenario, right? So we can get into a trading setup. That is what it's all about, right? Not just say, okay, this is going to continue to the upside, let's just long, or let's just short, this is the top. Without a doubt, there is that scenario that we could push all the way to the $67,000 that will be explained in this live stream. And this zone right over here, without a doubt, would be an epic pullback zone, okay? I'll explain that obviously right now in the next coming minutes when we do take a look at several scenarios. So first is first, take a look at the comment section, say hello to the beautiful community while you guys are smashing that like button. Let's get a few more people in the live stream, and then we're going to find that we can take a look at this, guys. However, this has been explained in today's video update. This looks very, very promising as well. This is in today's video update, so if you want to know more about this, a little bit more in detail, I think it's just as easy as going to today's video update, and it's the first 3-4 minutes of the video that goes in detail a little bit, to see where we're currently at here. And if we were to get that pullback, we could still be in the test zone of this reaccumulation schematic that is following very nicely, except for this up thrust in the phase B that did not take the highs, right? This is the only phase from this reaccumulation that is not really the same, right? So, something that we really want to take into consideration for the bearish case scenario. So if you want to know more about this, I think it's just easier so we do not make this live stream too long. If you want to find more about, more about this in today's video update, you can watch, the first few minutes that goes through this scenario and what we could expect next and what are the levels that need to maintain our support for this to hold, okay, to get some more momentum in the next coming days and weeks. Let's go right away through the comment section now, yes, guys, and then let's go through the pure Bitcoin technical analysis, all right? Valerie, aloha, how are you? Great to see you again today. Valerie, thank you very much. Nice to see you here in the comment section. Mark M, sup, Andy, how are you doing, my brother? Nice to see you. Komona, hello. Mohammed, yo, Summit Thapper, when big mega pump? We're gonna analyze the situation here without a doubt, because if that reaccumulation is what is happening right now, which could be the case, as we've been talking about for such a long time right now, that this movement is a corrective move. Come on, this is an ABC. This is just, claiming the lows. It's creating this spring point, liquidity grab, and we off to the races now in the coming weeks. We are getting that pumpy momentum. I did post about this scenario right over here that was getting very wedgy, something that, yes, we could have taken a look at short position just locally here, but very much aware of that, okay, double 1 2 3 4 5, right, getting very impulsive here based on the higher time frames, to just realize, hey, what if this is the low, right? If you take in some local short positions here, you want to be extremely defensive, right? Just in case this happened, right? And it did happen during the last couple of days, getting that really nice momentum, already hitting $65,000. Daniel, hello. Mesmer, let's effing go. Aditya, thanks for joining the stream, my brother. Market M, the double top on the lower time frame looks like a cup and handle. Yes, we're going to take a look at that also. Why not? What's up, Jay-Z? How are you? Let's go, Andy. BTC could hit 67K. Without a doubt, that is something that we are going to talk about today, right now. There's some really nice scenarios for the price to just push that momentum to the upside. I know this is a nice zone to look for some speculative short positions, and there are reasons why that I'm going to explain, of course, here, looking at a little bit of Elliott Wave theory and some harmonic patterns. Long time since we've taken a look at harmonic patterns, but we need to get them back on the chart. So without a doubt, we're hitting resistance here. We got that big cluster. We got a daily naked point of control. We got a weekly naked point of control. So we got a lot of resistance going on right there. This is actually the 618 Fibonacci from the high, okay, of June all the way down to the low here of July. We're just getting into that golden pocket phase here, 61865, which is already getting a reaction and it already got a drop today of over $2,000. Acceptable short position as well, of course, as we were hitting this high volume node from the third week of June. So let's continue here. Let's continue. Anyway, hello everybody. I wish I could go through the comment section. What about Mt. Gox? We need to talk about Mt. Gox, of course. I do have here something that I've been looking at here on Bitcoin Magazine, of course. Mt. Gox moved 95,870 Bitcoin worth $6 billion to unknown addresses. They've also moved it to Kraken, which, you know, basically, supposedly they're going to be returning that to the investors in the next 7 to 14 days, right? Something that we're reading here from the Block Pro headlines, that Mt. Gox creditors report email from Kraken saying it has received the funds, estimates payments in 7-14 days. So yes, are we going to get that bunch of FUD again? Are we going to get a major pullback because of this potential selling pressure? Without a doubt, yes. So yeah, apparently XRP is getting some momentum to the upside. We can probably take a look at XRP during the stream later on. Today, daily candle volume is pretty nice. Daily candle volume is pretty nice. Depending on what exchange, on Bybit, it is not too impressive. But potentially on Coinbase or Binance, we got a really nice move here with today's volume, okay, with this price action to the upside. Now, let's go right away through the different scenarios, guys. Going to explain a bit of harmonic, a bit of Elliott Wave theory. Let's, you know, bring the bullish case scenario without a doubt. Okay, spring point, swing long positions from this zone, very much acceptable. We can speculate into some short positions at this local range. Something that was explained with the Legends trading community, of course, is taking a look at this price action that we've had during the last few days, right? Let's focus here on lower time frames, because higher time frames, we do have the bullish case, reaccumulation, ABC finished right over here. And let's talk about the bearish case, right, as well, right? As traders, we need to take a look at the other picture and analyze levels of resistance and levels of support, right? We want a long retracements on an uptrend, but when we're trending to the upside for quite a few days now, and we're starting to face some big resistance zones, we can speculate in a reversal if you know how to manage your risk very, very well. Accept some small little stop losses, but if you do get that trade right at this zone, whether you're retracing here or you are retracing slightly higher, then obviously it's going to pay off your tiny little stop loss that you do have above certain invalidation levels. So let's go right away through the higher time frames here, 4-hourly time frame, and speculate on, you know, what would be a bearish case scenario? What would invalidate the reaccumulation schematic? This being a large ABC corrective move, what would invalidate this? Well, the only bearish count that you could do here on higher time frames is that you have formed a wave one here to the downside, right? This is the very unlikely scenario that will happen, right? You formed a wave one over here and you're still in the building, okay, of a wave 3 that is going to take your, the prices to much lower levels. Of course, I would speculate here on the wave 1 being right over here, the wave 2, sorry, of this corrective move. It is, without a doubt a scenario. The main reason why we could take this high as a wave 2 is because we did not claim the highs here in the second week of June on some exchanges. So you can take a look at this as an impulsive move to the downside. Now, yeah, taking a look at this as a wave 2, yeah, you have the scenario that this right over here is a 3-wave structure. There is a count here to make a 3-wave structure. It is definitely possible. And right now, what we are, when we take a look at the bearish case, which I think is the most unlikely, I am leaning to the side that, yeah, if we do get a pullback, likely to form a higher low. However, we want to be into some short positions at these certain levels of resistance that are going to be explained on the live stream, just in case the price suddenly gets a pullback, right? This is classic, right? It's classic. You go, you either retrace here or you move to 67K and you're getting a pullback. And in this pullback, we have a lot of people speculating that this is going to form a higher low at some point, right? Being at 61K or being at 60, or 59K to look for the price to then continue to the upside to all-time highs in the coming weeks. Then, what could happen here is that the price is basically not getting any support here and it's just breaking through, just getting small little bounces and continuing to the downside. So this is why you want to be positioned in a potential short position with very good risk management, okay? It's fine to get stopped out 1, 2, 3 times with a small loss, but the moment you manage to catch, okay, that potential reversal point, which is, it could be here, it could be here, and get that pullback, you want to be positioned. You basically want to be in a hedge short position from long positions that you are from lower, right? So we're looking at a hedge scenario, obviously maintaining those long positions just in case we get the momentum to explode in the next coming days, basically to all-time high, right? Which could be the case, right? We could wake up tomorrow morning and prices at all-time high, right? Unlikely, but it definitely could happen. So we want to be looking at the resistance point where we could get a reversal after this beautiful pump that we've had during the last few days. This is the number 1 zone that we do have here, which is naked point of control, right? From the 3rd week of June, you have a weekly and a daily naked point of control. When we do zoom in to this price structure, this is where it gets confusing. How many legs up could we have to the upside? Because this does look like a, double 1, 2, 1, 2. You're in the possible 3rd wave. You're going to get one more wave to the upside. Okay, you're still inside of the 3rd wave. Then you're going to push back up again. It just looks very confusing when you're looking at Elliott Wave theory. Because you just have a lot of micro counts here. Obviously, the bearish case scenario, right, from this point of this ascending wedge, it's very much invalidated with this rocket move that we've had. So now it's where it comes a little bit complex, okay, where you just looking at Elliott Wave theory to realize, what impulsive move we've got here and how far up can we go. Is this the top and are we going to get a pullback? We're going to come to the conclusion here for certain levels and certain projections in the next coming minutes, okay? So let's start off with Elliott Wave theory because there is also a harmonic patterns, okay? There is a couple of harmonic scenarios that I also want to cover, and we have some target zones, okay? There is multiple different harmonics, okay, that we could be topping out here at the 1.13, or we could get to the 1.27, which is very close to 67K. In this zone as well. There's a couple of harmonics here that I want to talk about, all right, which is also in confluence with some bullish counts here on Elliott Wave theory, all right? So let's go here and talk about, scenario number 1 here, which would be we've finished a contracting diagonal here, and the main reason why you can count a contracting diagonal is because you have 3 peaks, right? You need 3 peaks, 3 clear peaks, all right, getting above the previous one to basically realize that yes, you have formed a contracting diagonal right over here. What I do not like about this contracting diagonal is the corrective move, right? It's very confusing with this movement to the downside, right? Is all of this been already the corrective wave right there? Or do we have this scenario, okay, in a kind of a running flat, right? B wave not getting to the start of the A wave, C wave not getting to the A wave, and then, you know, continue to the upside. So we got, I don't like it very much, to be honest. You know, none of the two scenarios here. But if that were to be the case, then obviously you're looking at this being a 1-2, right? And this being the third wave or the C wave, right? And this is where it gets very, very interesting, because we talk about the bullish case, but we also talk about the bearish case scenario. And I want to go here with a little bit of, you know, Fibonacci to explain these impulsive moves. If this were to be the case that you're forming, you're inside of the third wave here, all right? Or you could be inside of the ABC. We'll talk about the bearish case now and then in the next coming minutes. First of all, let's talk about the bullish case. Well, inside of this third wave, if you're counting this as a wave 1 and then this the wave 2, we're looking at extensions, right? How far can a third wave go most commonly? Well, a third wave can go to the 1.618 extension, and that is when we get our extension tool to realize why we could be hitting $67,000 potentially tonight, right? You got a lot of people potentially speculating in short positions, and you're just getting the momentum to wick, to wick, and to wick, you know, stopping out all of those over leveraged short positions. I prefer much more the $67,000 range to speculate on a much larger pullback in the next coming days as well. And the main reason why here is because of the 1.618 extension from the wave 1 here to the top of wave 5. Okay, so basically all of this is one wave to the upside. Then you're going to the low, all right, of the wave 2, which would, you know, you got two levels here to take into consideration based on this corrective structure. Okay, you got this small little one right there, which is, you know, it's already hitting the 382 Fibonacci from the low to the highs. Okay, let me know, guys, if you can hear me. I hope you guys can hear me. And yeah, let's put a little bit of drum and bass in the background. So you basically retrace down to the 382, almost hitting 50%. So it's a valid count, all right, for a wave 2 right there, okay? Now, taking a look at the extension again, right? Taking a look at the extension to realize, hey, if this is a contracting, right, diagonal right there, this is the wave 2, boom, wave 3 can come all the way up to the 1.618 Fibonacci extension. And that 1.618 Fibonacci extension, which is, you know, it is a target zone where the price does reject many times. That level is sitting exactly at the one of the highest confluence levels. So without a doubt, I would take into consideration, and I feel like putting a limit short position here and a stop loss, give or take a little bit of room, because I know that I can probably wake up and we're already hitting that level and we're already getting a pullback of several $1,000s. I don't like putting limit, orders, going to sleep, and then maybe price has exploded out, right? I wouldn't know where to put my stop loss because I need the rejection right there from that level. So yeah, when we zoom out, the main reason why we could hit the $67,000 range is because of this third wave that we're in right now, okay? So the main reason why it's a good shorting level, it's a big level of resistance, is because we have the point of control from the entire range between March and July. We're talking about over 4 months of price action, and the highest volume node is sitting at $67,000, which is in confluence with the 1.618 extension if we are taking into consideration this scenario, okay? When we do take a look at, let me just get those waves right over here, right? If we were to be forming that third wave, we could without a doubt hit that level to then get a pretty decent pullback in the next coming days, right? To form potentially a fourth wave and then another explosive fifth wave. So what is curious about this level right over here is that we got a series of lower highs, which is basically from the price action of the third week of June. That is sitting at $67,300. So we could get that wick to grab that liquidity from these lower highs that we have here from June to then get the pretty decent pullback. Without a doubt, it's an extreme high probability short trading level. And you may ask yourself, how would I want to short this? I am going to get wrecked if I short right there. What if the price action continues to the upside? Guys, this is why we have trading plans and good risk management. We have a lot of confluency based on this bullish case. So far, we're just absolutely exploding inside of this third wave, creating massive micro count 1, 2, 1, 2, 3, 4, 5, 4, 5. This is just, when you micro count this is just extremely bullish. You got so many microwave impulsive moves that, without a doubt, you could just hit that 1.618 to complete the third wave that you're in right now, okay? So it's a common target zone hitting the 1.618, which is exactly where we have the point of control of the entire range between March and July. And what I like about this is the lower highs that we do have here, which is also where we have still a bunch of liquidity. There is billions of dollars still above $65,000. Couldn't we just flush all of those over leveraged short positions and liquidate them? Just pump another $2,000-$3,000, right? Around about $2,000 more, right? From 65,000 to 67. Just get that nice little pump, and then get the pullback, right? Because there is several $billion of shorts just sitting slightly above us, right? $1,000-$2,000. Easy for Bitcoin just to get that whoop to the upside to complete the third wave here, if we are speculating on this scenario, of course, to then just sweep up, all right, all of that liquidity, create a swing failure pattern from these lower highs as we do have the point of control of the entire range of March and July, all right? So anybody that is looking to short this level of resistance, manage risk accordingly, because if you do break through here, this is no zone to add to your short position, right? It's adding to your short, add. If you're using more than a 10x leverage, you're pumping over $2,000, you can get liquidated. Well, it'll be a little bit more leverage. If you're using over 20x leverage, without a doubt, with a $2,000 pump, you could get liquidated. That would be almost a 4% pump. So just over 20x leverage. You're already getting liquidated and you're getting into a dangerous position just in case the price just absolutely explodes here and gets to 68k and then gets the retracement down. All right. So this would be a zone that we either reject from this point, but if we do break this weekly and daily naked point of control that we had from a consolidation here in, the third week of June, I would expect the price to very likely get that push to the upside to 67k plus, right? Where I would be very much interested in that pretty steep pullback of a few $1,000s. Okay, and maybe even much more, because what if this over here, which I think this would invalidate the bearish count without a doubt. If we are going to count a bearish count here, speculating that this has been an ABC corrective move right there, okay, because without a doubt this could still be an ABC, but we do not want to overlap, okay. I would say that without a doubt, that right now, this scenario, as on many exchanges, we did not take this high. But if you say that this is a third wave right there and you're in the fourth wave, it's just, yeah, without a doubt, we're already hitting the 618 Fibonacci. You're just about to overlap this pivot right there, you know, if you are going to count that as a wave one. So yeah, this scenario is already unlikely. But if you're counting this as an impulsive move down, and I'm not going to go with the micro counts, but you could arguably discuss that you're forming a nice wave one here and you're in the wave two right now. I mean, that would be devastating. I know the bears would agree with this scenario that you're in the wave two right now and you're just going to form an explosive third wave down to get below $50,000, right? You know, we could arguably discuss that you know, it could happen. I don't think it's likely, but we need to take it into consideration as well. For the moment, bulls are in control right now during the last week and the momentum is to the upside, but we need to consider those levels of rejection. And an ABC scenario, right, in a zigzag, yeah, without a doubt, the C wave can hit the 1.618 extension. So if you're speculating on this, yeah, without a doubt, you could hit $67,000 and reject back down, get a devastating corrective move. Without a doubt, this is a good swing short position to hedge against the long positions, okay? This would be the zone to hedge just in case the pullback that happens turns out to be very impulsive and you start correcting here. Everybody's expecting a higher low and looking at support levels to see when is the bounce going to come, and then the price just moves very aggressively to the downside in a matter of a few days, right? So as traders, without a doubt, we want to hedge. We want to hedge and we want to take a look at the bearish case. I am bullish, but it would be foolish to just think I'm just going to long, right? I'm like, you know, the street horses, right? Where they have, you know, the blinds on the sides and just, I'm bullish and just, yeah, this needs to play out. Without a doubt, I am bullish, but I am considering shorting as well to basically hedge long positions. So the best level to do so, without a doubt, is that $67,000 area, looking for the rejection. As we sweep up those highs, we clean all of that liquidity that is still sitting above us, which is several $1 billion of short liquidations, to then get the pullback, right? However, we've already swept a few $1 billion of short liquidations with this pump that we've had during the last 2 days, right? We have swept up several $1 billion of shorts already. Yeah, could we get the pullback from this level, right? Because also, most commonly, also in a third wave, we don't need to hit the 1.618 on a third wave. Could we just top out here in this C wave and start moving to the downside very aggressively? Absolutely, yes. We are already getting a reaction here from this level. This is actually an acceptable double top scenario, right? Where we're just basically at the highs. It is an acceptable short. You're already getting that double top. You can have a minus stop loss above the highs just to speculate that, you know, this could be the high right there and we're going to go to lower levels. The other bullish case scenario, which is taking a look at this as a double 1-2 right there. 1-2, and you have formed right over here another 1-2 right there, which is very similar to the contracting diagonal based on looking at Fibonacci levels. You're inside of this third wave here, and you're going to sweep up these lows and then create another movement to the upside. And the main reason why you want to consider this level a topping point, when you take a look at Fibonacci extension from this pivot low, all right, you're counting this as a 1-2 right over here, and you get the retracement down here. You are hitting exactly the 1.618 extension where you have the weekly and daily naked point of control. When you take a look at this 1-2 scenario, hang on a second, sorry about that. When you take a look at this 1-2 scenario right over here, and you take a look at the extension from the end of wave 2 to wave 3, you are already hitting the 1.618 extension, which is, the most common target zone for a wave 3, where you're already getting a reaction. We've already got a pullback of a few $1,000s hitting that daily naked point of control. So you can see the technical levels, how they are getting respected. However, if this is a third wave, shouldn't we be creating a fourth wave in between today and tomorrow, right? Well, yeah, without a doubt. Without a doubt. This is why you have the next scenario, right? If you're still inside of, if you basically completed the third wave, which, this is an absolute headache right there, because, yeah, without a doubt, you could count here that this is, you have multiple micro waves here to the upside, which, we're not going to go in detail because it's just, we've hit the 1.618 extension, right? Let's just leave it that way. We've hit the 1.618 extension. We're hitting major resistance, right? Let's just speculate that this could be the end of that third wave. What is very interesting, of course, when we take a zoom in on the lower time frames, and we analyze this resistance zone, without a doubt, this looks like it could be forming a flat structure, right? And the main reason why is because this is very one wavy, right? If anything, it's a very three wavy, right? It go to lower time frames. Yeah, I don't see this forming, it's kind of, this is very straight to be a corrective structure to then just get large momentum to the upside. You usually have a three-wave structure, either in a flat or either in a zigzag, right? I only see one wave down here, hitting this major level of resistance. So what we can speculate here, okay, and this is not, guys, it's not a bad level to short, okay? I think it's an acceptable short position here where we're currently at, purely based on the possibility of creating this ABC flat right there to come back down to the $62,300. And like I said, the main reason why that you can speculate on this scenario is because of this very straight corrective structure that we've had. There's not a zigzag here. There's basically, it's too shallow in time and it's very straight, right? So yeah, when you take a look at this, it's like, come on, you need, it's very one wavy, it's very shallow in time. When you take a look at the timing here from this impulsive wave that we've had during the last few days, it's like, come on, are you going to break out here right now and go to 67K, or are you going to, get some resistance here at the weekly, daily naked point of control, the 1.618 extension? You've only formed a one wave down here. Come on, this has just been a liquidity grab back above the highs to form this double top, if you wish, or this ABC flat structure. So, without a doubt, you can speculate on that short currently, and purely based on Elliott Wave theory, purely based on the amount of resistance that you do have at this level, because, hey, we don't want to short randomly the price of Bitcoin when it's in a big major uptrend, right? I didn't short any of Bitcoin here, or here, right? But here, without a doubt, it's, a great shorting zone, because you are hitting Fibonacci levels. You are hitting confluence high volume nodes, which is a weekly naked point of control and a daily naked point of control, right? You're hitting 1.618 extension. You're counting the waves here. You got one big move down, one big move up here. It's like, yeah, I know that you could form a double top if you wish, right? If you're a pattern trader, right? You're just basically saying, okay, this is double topped right now. And you're going to get that pullback to sweep up the lows of today, which is sitting at $62,300. So this is the level to speculate on a possible, short trade, without a doubt. Managing risk, stop loss above the highs. Keep it simple, right? If you do manage to get into that short, you can profit, 4 or 5 times your stop loss. Then, of course, what do we have? We have harmonic patterns. You got several different harmonic scenarios. Long time since we do not talk about harmonics, but I've been analyzing this price structure that we've had during the last few days. And without a doubt, there are several different harmonic patterns that you can take into consideration at this point. And let's start off with the first one, which would be, okay, there's several different ones, but yeah, let's get this, I've got the cheat sheet here that we can go through the different harmonic scenarios. The first one being a bearish alt-bat pattern, right? You might think this guy is absolutely out of his head. He's talking about bats on the chart right now. And it's basically a harmonic pattern, right? Where you're hitting the 1.13 extension from this pivot point X, okay, to pivot A right there, okay? So this is the scenario right there. You can count this. There's several ways on counting this bearish alt bat, and you're hitting the 113 to perfection right there, okay? Let me just get here the harmonic so you can actually take a look at this bat pattern, right? And this is hitting the high confluence zone. So we got Elliott Wave theory, we got harmonics, we got, high volume nodes, right, where we do have naked point of controls. We're just adding all of these different confluence scenarios, and this is basically the bearish alt pattern, right? Where you are hitting, most importantly, you got a nice range of Fibonacci here in between A and B and C point, right? You can hit the 382, you can hit the 50%, you can hit the 618, you can hit the 0.88 Fibonacci. But the most important level is the 113 for this bearish alt bat pattern, which is at the D point to hit the 113, okay, expansion, from X to A, right? When you get the Fibonacci expansion from X to A, all right, you get Fibonacci retracement, and you take the retracement all the way down to that A wave. And you can see right over here, the expansion is hitting the 113, which is most commonly, all right, for that bearish alt harmonic pattern. You guys see this? So yeah, that is also a confluence zone based on harmonic. You got Elliott Wave theory. You're speculating on an ABC flat. You have the 1.618 extension from that third wave that we just mentioned, right? 1, 2, 3. You're hitting the 1.618 extension. You just got a lot going on at this level for the price to actually get a pretty decent pullback of a few $1,000s. 1.618 extension if we are speculating on this 1, 2, 3, 4, 5. You have the weekly, daily naked point of control. You got the harmonic bearish alt bat. You got, it's just there's a lot going on here based on patterns and different scenarios, and you're adding huge amount of resistance at this zone, which we already got a pullback. Don't get me wrong, we already hit that level today and got a rejection. However, what we're doing right now is retesting that level. Are we already getting those short positions that have entered into this pullback, sweeping them out to then get the pullback down? All right, and that's how you need to think as a market maker, right? Just sweep up those short positions that have entered late from this pullback, boom, and then create that flat double top. So yeah, without a doubt, major resistance, guys. The whole end game of this is, yeah, we're hitting resistance right now. Okay, so there's a lot going on here, guys. Hopefully you have enjoyed that educational content, guys. Harmonic patterns, they are easy to understand. It's basically based on Fibonacci, and you got a bunch of different patterns. We also have the masterclass, which is also, with the Discord. You can join the Discord, me and 𝗕𝗏𝗍, another coach who's here in the comment section. providing daily alpha information of levels of resistance and support, sign of strength, coming to the conclusion of where the price, can go in, in the next coming hours, in the next coming days. So that is what we do have right now. It's just so much going on when we at this level, right? There's so much going on, and this is the beauty about looking at confluence zones. You got harmonics, you got Elliott Wave theory, you got Fibonacci, you got naked point of controls, high volume nodes basically on fixed volume profile, right? You got so much to take a look at, and this is why we're getting this reaction here at this zone at the moment, which I do think that we could get that pullback, a pretty decent one, at least to sweep those lows again beneath $62,200. Now, what is disturbing for me when I do take a look at this kind of price action is the cheeky retracement that we did get today, right? What a cheeky retracement, because I do have this horizontal line here saying, this is a pretty decent SFP level, right? This is a pretty decent sweep up the lows and get the movement to the upside. But we were off by, a couple of $100, and it retraced it went all the way back up to the highs, pumping a few $1,000s. So the long positions, without a doubt, are still in your advantage locally. But this was a cheeky pullback. But what is disturbing about this cheeky pullback is taking a look at the Fibonacci from this pivot low to the pivot high, right? Coming all the way down to the 0.88 Fibonacci without sweeping that higher low, which is a classic zone to get a wick and then recover. We front runned it by a couple of $100. And it looks like unfinished business right there, right? It's unfinished business. It's a classic stop loss zone, right? To come down and sweep it up. And this is why this zone of high confluence is an acceptable speculation short trade to come down to these lows as a take profit zone, right? So yeah, that's basically a little bit of what I am looking at here more internally. And you have to have the brain power to come out with all of these different conclusions, right? Harmonics, Elliott Wave, high volume nodes, Fibonacci retracement from the high as well. You are hitting the 618. I mean, this level is an absolute barrier of resistance, and this is why we are struggling very much at this zone. However, I wouldn't go crazy with shorting this level, because if you break through here, if you're thinking of adding to your position, just be aware that if you break up from here, your big next level is $67,000. Yeah, if you are happy to add to the position and expect that $67,000, which is the highest volume node from March to July, right, as I explained here, if you expect, I've seen point of controls from a big major range just getting sliced like a hot knife on butter. You expecting that resistance, but what is better to get into and many times I got burnt like this, guys, in the past, without a doubt, right? You're expecting, yeah, price needs to retrace at some point in this range, so I'm just going to put a 10 limit orders here, right? And get an average fill, and then I'll be enjoying the pullback down. And then you wake up the next morning and the price action is at $72,000, and you've got wiped out half of your account, right? This is without a doubt the first years of new traders, where it's going to reverse, this is big resistance, this pump is going to end. And just for safety, I wouldn't do that, because I've seen big major resistance levels on the chart just getting sliced through. And the main reason why we could slice through this zone is because of higher time frame ABC, or because of this reaccumulation, right? We could just be pumping. There's no retracement here. We've had the test point already down here, and we're just going to start moving to the upside very aggressively, right? Like I shared with you here on today's video update, right? Where you've already formed that test. You've already formed that test right there, right? Maybe the test was already done a few days ago, right over here, because you did pump, you did retrace, and you already could speculate that you've already got above the creek point, which is getting above to the middle point of the wedge structure, descending channel, you're at the middle point already, right? Because you could arguably discuss that you've already, got above the creek point, right? The center of this descending channel, and there is not going to be any test at all. We're just going to continue to the upside. So, and this is why, and we finished this ABC, and it's time to get to all-time highs in the next coming days. This is why I would really not consider building a short position purely based on the reaccumulation and the end of an ABC right there. Because hey, if this goes and you don't get major pullbacks, I would not consider building a short position, because we could be hitting all-time high in the next coming days. Which is unlikely, of course. It's unlikely to happen that we just wake up tomorrow morning and we're at $72,000, but it could. This is why you do not want to take any, irresponsible trades. Let's go through the comment section, guys. Hopefully you have enjoyed this educational content of risk management, looking for high confluence trading setups. Make sure to destroy the like button, guys, because we haven't just been talking about resistance and supports. We're going through harmonics. We're going through high volume nodes. We're going through Fibonacci, extension, expansion. We're talking about Elliott Wave theory. We're covering a lot of things here based on technical analysis. And if you do enjoy that content, you want to go ahead and smash up that like button. I don't know what the heck's going on with the like button on my channel, but it's not getting smashed. So 𝗕𝗏𝗍𝗍, thanks for joining the stream, my brother. If you haven't checked out 𝗕𝗏𝗍𝗍, he provides insane technical analysis every single day, guys. Great alpha on his channel, and you can follow for more information there. Watch the channel for Discord. You can just scroll down here in the in basically the description, and you have it on the first. Join the Legends trading community, where you will be getting the modules. You have, you basically have me, 𝗕𝗏𝗍𝗍 coaches, and looking at different setup scenarios provided every single day, guys. Okay, so you have the Legends trading community down below. It is the first link. All right, if you want to join basically the modules, the information, the daily alpha, and the technical analysis, looking at the different setups. This man is a legend, Aditya. Smash up the like button, my man. The myth, the legend, Senor Andy, Dumpy Boot Boy, 𝗬𝗍𝗍𝗍. I just saw 𝗬𝗍𝗍𝗍 last week, actually a few days ago, because I was back in Spain, and actually saw 𝗬𝗍𝗍𝗍, Dumpy Boot Boy, my brother. Nice to see you. Thanks for joining the stream. Let's go right away and continue with smash the like cryptic. My goodness, I don't know how much. I ain't gonna get moving averages, right? I got to be serious, guys, here. I want to take a look at I don't want to put too many things on the chart. And I've been dabbling a little bit with moving averages during the last few days. The 200 MA, the 50, the 20, the ribbons, all the different moving average. I don't like moving averages, guys. I just don't like them. I don't like moving averages. For all of these years, if you have been following me on the channel, but anyway, views are going down, so I might as well just put those moving averages on the chart. If you want them, then we'll get them out. Oh, we rejected from the, we're bouncing at the 200 moving average. It's just, if you want to put it, if you want me to add it, I will be adding it, guys. If you want more technical analysis, right? Many of the different things to take into consideration. I think a lot of them are not needed. Just like the CME futures gap, right? Yeah, we can take into consideration the CME futures gap. I don't know. I wake up in the morning, I open Twitter, and a lot of people are talking about the CME futures gap. I'm not really a CME futures gap fan. I know, it can be attracted for the price to fill it at some point. But I've seen CME futures gap, still at $9,000. All of these boxes that I do have on the BTC1 chart, which is the CME futures on Bitcoin, these are gaps that haven't been filled, right? These are gaps that haven't been filled. Most of them do get filled, obviously, such as this one, right? This one that we had just after the ETF approval. We had a pretty significant gap, and okay, yeah, we filled the gap and then we continued to the upside. So yeah, we can take it into consideration. Let's just leave it that way. I'm not a huge fan of them because we have gaps that haven't been filled. So most of them do get filled. So yeah, we need to take them into consideration, right? They're not my favorite just because I know we can still continue pumping, right? You know, if you are going to trade based on we need to fill the gap, well, yeah, you could pump all the way up to a much higher level. So it's really not there's no strategy behind the CME gap. So, you know, it's just, we can take it into consideration. Okay, guys, yeah, we could hit resistance and we could fill the gap, right? But there's really no strategy behind CME futures. To the moon, Andy, Far Art channel. How you doing, my brother? Thanks for joining the stream. Many thanks for your time, Andy. Dean, thank you very much, my brother. The like count is a disgrace for this insane quality content, says Starling. You know, hey, I'm going to timestamp. We've covered many different technical levels. And without a doubt, if Bitcoin is going to get a several $1,000 pullback, it either has to be here or it has to be at $67,000, which you can pump a few $100s. I would be looking for a sweep of those highs and then the rejection. Okay, so you manage risk accordingly. I don't know what else I can talk about really regarding, you know, technical analysis, trading, and education. So, hi Andy, would you like to take a look at Matic? Shall we? Kevin, thank you very much, my brother, for that insane comment. You are the best, my man. We're going to take 80K first, then retrace. Yeah, very possible. I like that. I like the possibility of going to $80,000 and then pulling back. Okay, we can talk about the projection, looking at Elliott Wave theory based on, you know, we can hit $80,000 and then get the pullback, and that is purely based on the possibility of still being inside of a fifth wave, inside of the third wave. Okay, without a doubt, you know, the main reason why I would say, yeah, we could be going to $80,000 range is purely based on this, right? Purely based on this scenario right over here. Still inside of the third wave, we have a beautiful three-wave structure here in an ABC, okay, or a WXY if you wish, and we're going to you know, claim all-time highs to complete this third wave structure, as we still have the fifth wave to complete. So I agree with going all the way up to $80,000 and then getting a very strong pullback for several weeks. Without a doubt, you know, I wouldn't be too bullish if we hit all-time high, guys. You know, without a doubt, I would consider the possibility of completing this fifth wave and getting the pullback. But we'll talk about that once we get there. Once we get there, right? This is just pure speculation right now, of course, for the moment. It does look pretty good based on the reaccumulation schematic that, you know, we could be heading to all-time highs. But we'll talk about the pullbacks and, you know, levels, target zones, Fibonacci, extension, expansion, timing, once we get to that zone, right? I don't think we'll be pumping $10,000 overnight, right? Once we get to those zones, then we talk about those different scenarios, right? So, or unlikely, can we SFP another time from the highs? From what highs? The local highs that we have right now? I would consider that we could, not SFP, more like a failed auction. And there is an explanation on that, obviously, and that is what we're gonna figure out right now. Because if we do see this, I mean, yeah, this is just, there's a lot of micro counting here that, you know, the only main reason why I would think that we're going to basically another failed auction or SFP from this level, we would have to micro count the Elliott Wave scenarios, okay? And without a doubt, you know, if you're speculating on this wave 1 right there, this wave 2, you're still inside of the wave 3, okay? This I really get exhausted with Elliott Wave count. The main reason why is because you could extend here to the 1.618 really, okay? If you're counting this as a 1-2 right there, based on the what we talked about, or this contracting diagonal right there. There's 5 waves inside. You got 3 wave peaks, okay? And I would say that you could go to higher levels. I wouldn't expect, if you are going to hit the highs again here, and you are going to, get a pretty decent push, this is when you need to micro count this scenario where, oh my goodness, let's just change this color right away. 1 second. I'm going to change this to white so we just don't have many different, the same color here, obviously. You would have to count this as a wave 1. You got insane micro counts here. 1, 2, 3, 4, 5. Completing this 3rd wave. You got a 4 right there. And if you do extend to higher levels, you could be forming a 4-5-4-5 as well. Yeah, I would be cautious, because if you do hit those highs again, I would consider the swing failure pattern. You could still form. I mean, let's just zoom in here on the lower time frames, because that is going to be much better to analyze this price action, okay? Because you could just go absolutely bananas with the possibility here. What I do like about this, I think this is still a great shorting range, guys. I am in a short position from this zone, okay, based off the swing failure pattern. Now, stop loss above the high, keeping it simple. If we are going to, what I do like about this is, hey, this is a very 3-wavy move, right? This is what you want to see. If you form another wave up, you need to start thinking of a contracting diagonal. So yeah, without a doubt, if you claim those highs, if you do claim these highs, yeah, without a doubt, you got the flat scenario, which looks pretty promising, which is this one, right? You got an A, B, and a C wave down. You got 3 waves down here. Okay, let's change this color so we can understand what are the different scenarios. You got a 3 wave down here. You got this possible 3 wave up. And now what you want to see in the C wave is a lower high to be created and form 5 impulsive moves down till you complete this C wave, right? In the flat structure. So what if we do take the highs again? Well, then we are forming 5 waves up pretty clearly, right? Pretty clearly you're forming 5 waves up. And if you are forming 5 waves up, you need to think of contracting diagonal right there. Okay? We'll get that. Without a doubt, you should be getting a pullback. So yeah, another failed auction, swing failure pattern from the highs is definitely on the cards. And then get the pullback, then get the pretty decent pullback potentially to sweep up this pivot low at least. Okay, so yeah, just looking at the waves, it either forms a lower high or it gets a pretty decent push up and then gets the corrective move down to this pivot low. So yeah, I'm going to say yes, without a doubt. I would speculate on another short position, managing risk very, very well. You could have another attempt in breaking out and just failing miserably, stopping out all of those short positions. This is bullish, and then you get the pullback down, right? You're just stopping out all of those early short positions that are trying to speculate that short trade from this zone. But then when you take a look at Elliott Wave theory, you know, you could be forming that, you know, that contracting diagonal right there and then get a pullback down later on. So yeah, I would still be interested in that short position, obviously, if you were to wick above the highs. I wouldn't go too crazy, and I wouldn't, you know, use a huge amount of capital just in case, you know, the price just really rockets, and you'd have to take a look at other different scenarios. But yeah, you would want to see that wave 5 shorter than the wave 1 and the wave 3. So you wouldn't expect very much momentum here. It would be, you know, it's a possible failed breakout. And the scenario is the same. Stop loss above the highs, short the rejection, and look for that move to the downside to that, at least to that wave 4 right there in the contracting diagonal, either in a 3-wave move down or in a, you know, yeah, basically in a 3-wave move down, or just, or basically a much larger corrective move here in the next coming days. So without a doubt, I would consider also, yeah, the highs being tested and then the rejection, just purely based on 5 waves here to the upside. And the only way to count this is a contracting diagonal. So yeah, without a doubt, it either rejects from this point or you get one more move to the upside. And if you fail to move successfully above this pivot high, you got a very high chance to wick down to this pivot, okay? So yeah, that's also a scenario. Would definitely consider it. I'm not selling anything. 60k rejection zone. Andy in parrot mode. Brr. I sold some quant for pocket money today. 185 likes, guys. We can smash up the like button to all-time high. Very unlikely. Hi, Andy. Would you take a look at Matic? Thanks. Keep the amazing work. Let's take a look at Matic. Okay. I'm just going to do an average TA on Matic. All right. Nothing too special, because if I need to take a look at the levels and do a pure technical analysis, like going in detail of the levels of resistance and support, it's just going to take a long time, right? And the people are going to leave the stream and going to say, screw this guy. I ain't going to watch this. So yeah, basically on Matic, I like that we've come all the way down to test the lows from 2023, which is, you know, it's a higher time frame low. 2023 lows has been tested, and we've created a bit of a failed auction. Liquidity grab, boom. It does look promising. If Bitcoin is going to behave, which we do expect, all right, we do expect Bitcoin to behave and potentially hit all-time high in the next 1 to 2 weeks, 3 weeks, right, give or take, then obviously this is not a bad zone for Matic to actually recover nicely as well, okay, as we've got a really sharp pullback in between, you know, since March. Devastating pullback. My goodness, I don't know what this is, but yeah, basically a 60%, 65 plus percent pullback. Also just got, you know, a lot of altcoins have just got a major devastating pullback the last few months. So yeah, you can speculate that this, you know, this over here, you know, could be a bottom range. I do like the expanding diagonal, right, that we formed here since the low, right? If you do get a wedge right there, a broadening wedge, without a doubt you can count this as, you know, there's 3 peaks, right? There's 1, there's 2, and there's 3 peaks right there. So you got a megaphone pattern, right, as well, if you want to call it that way, or an expanding diagonal here. And inside of this expanding diagonal, can we speculate that this corrective move has been just a large ABC? All right. You know, it's also, and the main reason why this could be like this is because you formed 5 waves, right, during 2022 to 2023. You know, is this the end? You've retraced all the way down to the 0.88 Fibonacci. Whew. It's like, hey, Matic, it bounces here from this zone, or it's claiming the lows. And if it does claim the lows, then we'll have to come with another scenario. The lows from 2022 at 31 cent range, right? But yeah, there is a high chance that this could be the local low, at least for the next coming weeks on Matic, to get a pretty decent pump, just purely based on Fibonacci and the technical levels. So yeah, this is, you know, I like it. We're testing the lows of 2023. We're already recovering above them. And, you know, it does have a high chance that, you know, if you do get a pullback from this range, you could be forming a higher low. So it looks pretty promising for a decent recovery in the next coming weeks, okay? Legends, I'm going to wrap it up. Remember, if you are interested in trading, I know a lot of you already signed up and trading. You have Bluffing, which is a great alternative to Bybit. I trade on Bybit, also 𝗖𝗍, you know, and Bluffing, no KYC platform. You do have the biggest bonus available. It is the third link down below. It's another way to support the channel, obviously. But you trading on a no KYC platform and has proof of reserves, completely transparent. It's a great alternative for all of those people that cannot trade on Bybit or 𝗖𝗍 based on KYC. Gonna wrap it up. Thank you very much. Hopefully you've enjoyed the banging technical analysis from the beginning, guys. We've been talking about Fibonacci, naked pointer controls, harmonics, Elliott Wave theory, the levels of resistance, you know, sign of strength, sign of weakness. If we are going to get a pullback here, guys, if we do get a pullback, without a doubt, I am considering the 62,300 to 200 range to see a swing failure pattern, possibly completing a fourth wave right there to then get one more high. That is without a doubt a scenario. I want to see price recovering from 62,200 if we get that pullback. Not interested in longing if we are below. And if we do get a much stronger pullback, then obviously, yeah, I don't want the price to basically go much lower than the highs that we created from a few days ago, right? If we are going to overlap this scenario, then we're going to have to start thinking on, you know, the bearish case, right? If we do get a pretty decent pullback to fill the CME gap, then the only bullish count here would be an expanding, okay, diagonal right there, which is very unlikely. So, you know, if we are starting to overlap this pivot, you know, we have to consider the bearish cases, right, to then possibly come down to the low. So overall, I want to see some proof of support at this level. First of all, 62,200 would be our first level here to recover, to then get continuation to the upside. If we break through from that level, I do not want the price to overlap the $60,000 range, right? That would be kind of the max level that I would want to see the price going to, based on 618 Fibonacci from this pivot low to the pivot high. Not overlapping the first wave. We've got a naked point of control from consolidation that we had on Sunday. I want the price to maintain this zone, right? 50% to 618. We want to see some proof of support to then speculate that, yeah, we're getting a bounce from this level. It is also where we have the value area low of the entire range between March and July. So we don't want to fuck around very much here at these levels. And we want to see some proof of support to speculate that we're going to get that bounce if we do get the pullback. Legends, thank you very much for joining, and I'll see you in the next one.